Shares of Tesla sliding as the company prepares to report results after the bell. The EV maker experiencing a rocky start to the year in which it cut more than 10% of its headcount and saw its second quarter deliveries decline. Here with me at Post 9 to discuss what investors are focusing on and what lies ahead for the company is Wedbush's Dan Ives. You see there Tesla down 1%. So, Dan, year to date, it's actually kind of flat. It's been quite a ride. It goes down to 175 and pops back up to current levels. Over the course of the year so far, also because earnings estimates for the year have gone down, it's, stated PEs from like 65 above 80 now. So where does that leave us? I mean, what does the company have to show in order to convey that there's some progress on the important stuff?
I think two dynamics going on. One is the demand story, specifically in China. It's that turnaround. I think we saw it so far in 2Q. The big focus will be Musk talking about that second half of the year. And then the biggest thing, too, is pricing. I mean, you're talking about a company that, as we've talked about a lot, cut prices a lot the last year. Now you've seen a stabilization on prices. That's important in terms of the gross margin, call it 16.5%, 17%. But then the big reason the stock's up, it's about that AI robotics play. Robotaxi day, I'd expect Musk to actually give a date. We'll call it early to mid-October. And these are the important things right now that have really been, I'll call it a bit of a renaissance of growth for the comeback kid, Tesla.
It was a day that Tesla investors won't forget anytime soon. On July 11th, a streak of good fortune that saw Tesla stock rallying came to a sudden halt as the company announced a postponement to the much-anticipated launch of its Robotaxi. The impact was immediate. Tesla's stock plunged by 8%, partly attributed to the Robotaxi delay, which wasn't the only piece of disconcerting news for the electric vehicle giant. Let's delve into the multifaceted challenges Tesla is battling, including the loss of U.S. market share and international struggles, as well as what implications these may have on its stock. Elon Musk, Tesla's enigmatic CEO, has been promising the advent of the Robotaxi since 2015. Initially, it was forecasted to achieve full autonomy within 3 years. Fast forward to 2023, and the Robotaxi is still conspicuously absent, despite several proclamations that hinted at its imminent arrival. The latest delay, pushing the launch to October from an earlier scheduled date in August, saw Tesla's stock tumble by 8% in the wake of an already declining financial outlook for the company. The incessant delays raise crucial questions. Why are these advancements taking so long? And what does it mean for the future of Tesla's stock? Musk's interminable timeline has, for some, become more of a running joke than a roadmap. However, the seriousness of the situation shouldn't be understated, particularly when the stakes are as high as an 11% yearly decline in Tesla stock. So let's dig deep in the background of the latest news about Tesla. But first, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's bring back Gene Munster of Deepwater Asset Management for more on Tesla. We just had the headline about Robotaxi, Gene, and also there's another one saying that they expect Roadster production to start next year. What do you make of all this?
Well, I make of it, Melissa, is I think that the stock has continued to slip in the after hours as soon as Elon kind of wrapped up his first 10 minutes of comments. And I think investors were hoping for him to say something more optimistic. You mentioned a couple things there, but that doesn't really change the trajectory. That still the substance of the excitement of the story is probably a year plus away. And so I think all of those are good around just check the boxes, but those boxes don't start getting checked for some time. And I think that's probably why we continue to see a little bit of slippage in the stock.
For the first time ever, Tesla's share of the U.S. electric vehicle market has fallen below 50%, now standing at 49.7%. The rapid erosion of market share from 59.3% a year ago is noteworthy, especially given the burgeoning competition from stalwarts like General Motors and Ford Motor Company. What's worse, Tesla's woes extend beyond American borders into Europe and China, where the company faces fierce competition from local EV manufacturers. Tesla holds just 20% of the market share in Europe and a meager 10% in China, exacerbating concerns about its global competitiveness. Cox Automotive's findings could hardly have come at a more inopportune time. Overall, U.S. electric vehicle sales grew 11.3% in Q2 2024 from a year ago, yet Tesla's deliveries declined by 5% from the prior year, ostensibly due to increased competition and an aging lineup of vehicles. This backdrop of eroding market command poses grave implications for Tesla's future valuation and stock performance. But what exactly are these implications? Let's go through this. Hello everyone, and welcome back to Investocracy.
Tasha, I want to get your thoughts on these results, especially since I know ARK is a long-term investor in Tesla, and you've come on the show before and laid out the case for autonomous driving and robotaxis. But even if that is the future, it's arguably years away, so why buy the stock now?
Yeah, so actually, I think, when we're talking about robotaxis, this is something that will happen, we believe, within the next 5 years. So in fact, our 5-year price target, we think that robotaxis will contribute over 90% of the enterprise value of Tesla at that point. So I think, I'm looking forward to hearing more detail on the call. What we've been seeing from Tesla is, of course, incremental software updates. They have a latest version of FSD where it's very limited in its release currently, but they're adding the functionality to take your hands off the wheel. They said in the letter that they expect the take rate of the full self-driving software to increase based on the increased functionality that they see. So I'm looking forward to hearing more about that rollout, because I think to ignore robotaxis today is a huge mistake with this stock, because ultimately it's an AI play.
Tesla reported weaker than expected earnings for Q2 2024. With earnings per share of 52 cents, falling short of an expected 62 cents, and automotive revenue dropping by 7% year over year, the financial metrics were anything but rosy. Though total revenue did increase slightly to $25.50 billion, the automotive sector, which remains Tesla's core business, accounted for $19.9 billion of that sum, down from $21.27 billion a year earlier. Investors might take solace in the revelation that Tesla recognized a record $890 million in regulatory credit revenues for Q2, triple the amount from a year ago. However, these regulatory credits are essentially a band-aid solution that fails to address the underlying issue: declining car sales and lower profitability margins, now standing at 6.3% compared to 9.6% a year ago. Elon Musk's recent comments have reignited debates and speculations across social media platforms like Twitter. For instance, his bold statement on being shocked if we cannot do Robotaxi next year juxtaposes sharply against the backdrop of consistent delays. Another tweet belittling Waymo's robotaxi services as limited and fragile raised eyebrows and prompted questions on whether Tesla's self-driving technology can indeed outperform competitors globally, as Musk claimed. The contrasting investor sentiments caught in tweets and forums underscore the growing apprehensions surrounding Tesla's ambitious yet delayed projects. So, should you invest in Tesla now? Does all this mean Tesla is a sinking ship? Well, not necessarily, and we will tell you why. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
There are important things definitely for the stock and how it trades. I mean, how important, at least anytime soon, is that going to be for the company itself in a tangible way?
Yeah, I think from a stabilization, it's about EV demand. Demand clearly has started to stabilize. And you saw GM clearly pulling back a bit from an EV strategy. Tesla's doubling down. Do they talk about that sub $30,000 vehicle, call it in 2025? Do they give the roadmap to where you could look at 500,000 per quarter, get on that run rate to, we'll see, 2 million into 2025? Then investors, that stabilizes the story. And then really the cherry on top of the sundae, or really what could be the sundae, is the AI story, the robotics play, FSD, autonomous. That's really ultimately how you get to $1 trillion, $2 trillion valuation.
While recent news has highlighted multiple challenges, one must consider the bigger picture. Tesla remains a leader in the EV market, even with a reduced share. The company's energy generation and storage business almost doubled its revenue to $3 billion in Q2, showcasing areas of growth that could potentially offset some of the EV sector's losses. Moreover, Tesla's ongoing investments in AI and robotics indicate a forward-thinking approach, albeit one fraught with high costs and uncertainties. The company's plans to introduce more affordable EV models by 2025 may well be a turning point if executed correctly. Investors eyeing a long-term growth trajectory may find Tesla appealing, given its relentless innovation and market leadership. Seeing beyond the storm, current market conditions and competitive pressures make this a tumultuous period for Tesla. The delays and declining market share are undeniably concerning, but it's essential to remember that Tesla has consistently bounced back from adversity before. The upcoming Q3 results and further updates on the Robotaxi could be critical in either reassuring investors or fueling further skepticism. In the end, it's not just about where Tesla is currently, but where it's headed. The question now is, do the diversified investments in AI and energy signify a radical yet profitable transformation? Could the introduction of new, affordable EV models reignite its dwindling market share? Tesla's stock may be volatile, but so too is the landscape of innovation. Investors should weigh these factors carefully and consider their risk tolerance. After all, as the famed quote goes, "Fortune favors the brave." In the end, please engage with us. What are your thoughts on Tesla's recent developments? Are you optimistic about its future, or do you share the prevailing skepticism? Share your opinions in the comments below. Your insights could shape the next discussion in this ever-evolving saga. Furthermore, if you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.